And maybe for the minister's sake, I'm going to ask, I'm going to reintroduce myself, and then briefly our panel will introduce themselves. My name is Daphine Naahwera. I do PR and marketing for MCS, and I am the panel moderator today. Thank you.
Honorable, my name is Dan Tumuramye. I am the Managing Director of Cheaper Cash and Director at the Board of Uganda Securities Exchange. Thank you, sir.
Good afternoon, Honorable Minister. My name is Jacinta Anyinge. I'm a lawyer with the Central Bank of Uganda. Thank you.
Good afternoon. My name is Alex Nkabahona. I'm a retired lecturer, professor, Makerere University, and currently into farming.
Minister, I would like to inform you that all these are members of MCS. You can see the caliber of the quality of membership that we have. And the reason we chose our members to do this panel is because, one, we set out to educate people about financial inclusion and financial literacy, and we have been doing that on our social media spaces. We have had panel discussions and spaces during the campaign for this event, because we want people to know and learn and understand more about how they can invest and how they can save. So when you came in, Alex was telling us about coffee farming and how he moved from academia to coffee farming, trying to inspire fellow people who are in academia out there that it's possible to come out of your job or even within your job to be able to make meaningful investments through farming and other projects. So I'm going to ask, I had already asked Alex, for context I'll give him another one, but right now I'm going to move to Jacinta. And Jacinta, wealth protection is as important as wealth creation. From a legal and regulatory standpoint, what should people prioritize to safeguard their investment? Thank you.
Thank you so much for that question. And as a lawyer, I'm always passionate about how we preserve our wealth and how we can protect ourselves and all the things that we've struggled to earn while we're still alive. First and foremost, I've always advocated for each of us, whether you have nothing, you claim you have nothing, please write a will, because the will gives you a voice even when you are dead. Make sure you have a will which is well aligned with the requirements of the law. And what is that? That will should be witnessed by 2 people, minimum. And with the amendments that came up recently, for each and every page of your will, make sure it has been witnessed. We are avoiding a scenario where some of the pages of the will may be mutilated. Someone takes it and replaces it. So your will should be witnessed. Your will should have, your witnesses should never be the beneficiaries. So if you're a parent like me, a mother of 2 boys, I cannot ask my sons to be witnesses to my will because they are beneficiaries. So you get an outsider, someone who is not benefiting, to witness your will. The other advice I would give is make sure your will is drafted by a professional, as in a lawyer. So what I'm giving you are just tidbits, but the details, you have to deal with it when you get your lawyer. What is the other thing that we'll talk about for preservation? We are buying properties, for example, in MCS. A number of us have invested in properties. In whose names are we registering the properties? That is one of the things you should keep in mind. The law currently, we have legal jurisprudence which clearly says that the people who are registered on your title are the people who will be recognized. In case one of you dies, who is on the title moves on to the person who is subsisting, who is alive. Who are the people we are putting on our title? Some of us put acquiring property, and we are writing, and then we are putting our family members, our friends on the title. Please note, if any of you dies, the property will be owned by the people who are alive. That is what case law has provided. When you're registering your company, a company is another way of preserving your wealth. Sometimes we make all the money. Now my colleagues here are into farming. This one is managing cheaper. I don't know whether he's the owner. But how can you preserve your wealth? Sometimes you preserve it if you want that wealth to move from generation to generation, like I previously told you, I'm a Christian, we have this principle that says a good man leaves an inheritance for their children's children. The question is, the wealth that you're creating, is it passing on, are you passing it to your children, or your grandchildren are going to benefit from it? Our principle as Christians, it should benefit your grandchildren. How can you do this? You can register a company. When you register a company and you do your business, a company is an individual, and that company will continue living even when you have died. And how do you do that? You make sure your management of the company is standing firmly. Your own family members can continue running this company, such that even when you die, the business continues running and it benefits the future. So how are you structuring your investments? We also have a trust arrangement. When you compare trust with the will, if you're the kind of person who wants to leave your wealth to subsist very many generations, the best way is to do a trust. Because you can establish a trust when you are alive. And then you move all your properties and put them under the trust. And then you say, this is how this trust is going to run. My children, my grandchildren, for example, if you have now the properties real estate, and then you have rental income coming from it, instead of your family members, when waiting for you to die and splitting the property, you'll say what they'll benefit using the trust arrangement is they will only get rental income. So it will pay school fees for this child until they reach university. Some of us may be picky, and you're saying, I don't want my child to be a homosexual. So in your trust, you clearly say, when this one becomes a homosexual, please, they will not benefit from my trust. So it gives you the willpower to dictate, even for your children's children. I do not want this one to cease being a Christian and then they become a traditionalist. If they become a traditionalist, they cease to benefit from this trust. So you have the willpower to go around some of these things when you arrange your investments. Thank you so much.
Elaborate, and thank you very much, Jacinta. I hope we have learned something today. We are all going to go and create trusts and also create companies so that we can safeguard our investments. Mr. Tumuramye, many Ugandans confuse saving with investing. What are the most accessible passive income pathways for ordinary people earning both small and large incomes?
Thank you very much. I think it's a very tough question because from my field of experience, I do not always use the word passive. Because you see, when you use the word passive, someone goes to bed and sleeps and becomes lazy, thinking that MCS will do the work for them. But it is active. It is income that should always be active. So what are the things that we should be doing to keep that activity? Because you see, Professor said he's retired, but he's still active. He's not in agriculture passively. You understand? So one of the things that, I'll start domestically, things that we have locally in Uganda. One of the things that you can do is joining the equities market. Equities market is simply buying shares for already listed companies on the stock exchange. In Uganda, we have 14 companies, and we have 4 companies cross-listed from Kenya. I'll take a very quick example. MTN and Airtel, by the will of the president of this country, pushed MTN and Airtel to sell out their shares to the public through an IPO. So now, because you're a customer of Airtel, you should have at that time bought into the shares of Airtel at the primary market. Now, we have 2 types of market. Primary market is when the company is floating the shares. Secondary market is when you did not buy the shares at primary market, you're buying from a person like me who bought shares. Now, a share goes for 100 shillings at that time for MTN and Airtel. Today, the share of MTN is at 350 shillings. The share of Airtel that time was also 100 shillings. Unfortunately for them, it's at 90 shillings. But it's a benefit because the rule of thumb is you buy low, you sell high. So this is the right time to everyone to invest in the equity. So that's one section. So you can choose any company that you want. We have local companies like Quality Chemicals. They recently got funding. their share was running for 40 shillings. It's now at 120 shillings. So if you had bought at 40 shillings, you're already having 45% that as interest. Now, so that's one level. The second level is joining the treasury bonds and bills market. Now, what that gives you is that you can borrow government money. The Honorable is here, he can attest to that. So the current budget for Uganda is 72 trillion and growing. But government can only fund that budget by 40% of their collections, domestic tax. So what they do is that they get both domestic borrowing and international borrowing. So domestic borrowing is the bonds and bills that we can play in. So MCS today, if MCS will at a later time break for you their asset portfolio, they have invested in some bonds. Uganda, I think you can clarify, but so far Uganda has only issued, I think, 22 bonds. And some of the bonds have been reissued, meaning that some bonds were once issued, but because the period didn't expire, they were reissued. So now you can take part in those bonds. And the minimum investment in a bond is 100,000 shillings. Now, in my experience as a digital professional, the telecos and us, the fintechs, are trying to innovate and say, look here, the bond market is not for only the rich. The assumption is that the bond market is for people who have billions on the bank account. No. The bond market is anyone who has a balance on mobile money. Anyone who has moved with his pocket change of 200,000, 300,000. Why? Because the bond market pays. Imagine borrowing government. Can government ever steal your money? Ladies and gentlemen here, you don't trust your government? Imagine borrowing government. You are part of a stakeholder in government. And government, the beauty about bonds is that they pay 2 cycles in a year. So every 6 months you get paid. The largest interest we have on a 25-year bond is 16.5%. And there's no business that will give you 16.5% passively. She talked about passively, but me, I'm saying actively. Why? Because through the government programs, me, I'm in the private sector, but I'm one of the advocates of people who read government programs. I'm not sure whether anyone here has read the NRM manifesto. I'm not sure whether anyone here, apart from the Honorable, who has read what I call the president's nomination speech. Whenever you read those things as in the private sector, you'll know where the government is going. In the president's nomination speech and State of the Nation, the president gave 8 areas where they have put money. And that is where I tell the MCS board that this is where we need to be. You understand? Where there's billions is where we need to be. So at least those 2, you know that you can use that passive income, the way you call it, and then get into income generation through those investments. Thank you very much.
So that was very interesting. And I hope we can all take and learn something from this. And one last one before the minister comes. I will invite someone else to invite the minister because I'm too small. But one last one for Alex, maybe so that you can share with the minister your thoughts. Alex, for young people and professionals, what mindset shift is required to view agriculture, especially coffee farming, as a generational wealth tool and not just retirement work?
The message I have for the young people out there, do not underlook any business in life. Even however simple it may look like farming. Get your hands dirty, get to work, and the returns are inevitable. Today, we know the young people are more into border riding and all that stuff. And when the income is not sufficient enough, they end up in criminality. But I'm giving you as an example that from a teaching profession to a profitable agriculture is possible. And don't overlook these small businesses that can eventually turn into long-lasting incomes for yourself and for your family in future.
All right, so we are going to proceed with the questions. And I think I'm going to start with Mr. Tumurami Dan. And we all know that he's into capital markets. So I'm going to ask him a question about capital markets and general wealth, generational wealth. How can instruments like shares, bonds, and collective investments schemes help families build wealth and outlive them?
Yeah, so the question is, how can investing in shares, unit trusts, and bonds, right, help families build generational wealth? Yeah, so I would say that in wealth management or building wealth does not require you to have one particular type of investment. For example, you cannot only invest in land and land alone. Why? Because when you're in investments, there's something we call risk exposure. So if you invest in only one sector, you expose your money and your investment onto risks, seeable and not seeable. But when you invest in bonds or when you invest in shares, for example, MCS is launching Mesu Academy. The reason why I am going to invest in this academy is because, one, my risk will be spread. One, it is a collective investment. If I was to do it myself, I would not build that school, isn't it? But because it's collective investment, people have, like minds have come together and they are investing in a school. Now, ask yourself a question. If I was to buy land today in Chanja, an acre of land today in Chanja is $1 billion shillings, minimum, averagely, close to $1 million. So if I was going to buy land in Chanja to build a house, I need to have an investment worth $1 million, isn't it? But as an individual, that's not common money. $1 billion shillings is not common money on someone's bank account. But because of collective investment like MESU, like MCS, we join together with other investors and build what? A school. Through your shares, you then own into the stakes of that school. Now, that gives you, as a family or an individual, guarantee that you're going to get quarterly or annual dividends. Now, if you look at companies listed on the stock exchange in the capital markets, companies like MTN, Airtel, companies like Stanbic Bank, DFC, they do pay dividends every quarter, and they do pay dividends every year. Recently, in the last quarter, which is Q3, MTN is going to pay out 245 billion in dividends. Now, were you part of MTN start of the journey? No. Did you buy land where MTN has a mask? No. Did you help MTN buy a company that manufactures SIM cards? No. But you are part of that investment vehicle. So the opportunity that comes with shares, the opportunities that comes with collective investment schemes, the opportunity that comes with bonds is that, one, you limit your risk exposure. Two, you build a portfolio. Take a very quick example. Today, MCS is in at least a minimum of 5 sectors. If I think about them, agriculture. They are in agriculture alone. They have underlying sectors, which is, I think, goat farming, coffee, and so many coming. They are into real estate. In real estate, they are both in land and building. Now, they are coming into academics, which is education sector. Now, a person, you invest once, and then the person, the vehicle on which you have invested takes all the opportunities in the sector, and you earn. So that's the opportunity of investing collectively. One, you reduce your risks, and you're assured of long-term generational wealth. So your children and children's children
will earn from Meso Academy for the decision you took on the, today is what, the 13th? On the 13th of December to join MCS. Thank you.
Bigger hand clap, because that was so enlightening. Thank you very much, Dan. Jacinta, what legal red flags should investors watch out before committing to cooperatives or circles or any other investment schemes?
Thank you so much for that question. What is it that you and me should consider before we invest in any cooperative, so-called cooperative or investment scheme? The first thing we should ask ourselves, is this institution licensed or is it registered? So for example, like Meso, it has been registered with the Cooperative Society. And for it to do money lending, they have also registered with the UMRA, Uganda Microfinance Regulatory Authority. That one allows you to also lend money. So registration is a requirement. How many of us have asked whether Meso is registered? They have told us on the WhatsApp group, and they have been sharing that we are registered. Even the minister has confirmed it. So me and you as an investor, those are some of the things we should look out for. Why do you need that information? It helps you know whether your money is protected wherever you're putting it, because these people are collecting money from the public. And the regulator must protect the interest of the investors or the people who put money in that institution. What is the other thing that you would consider, you and me? You ask them whether they have any bylaws that regulate them. What is the membership? How does one join this institution or this investment club or this cooperative investment scheme? So we need to look out for the bylaws, and the bylaws will tell us the voting, the governance structure, and so many other things inside there. And what is the other thing that I would check out as a red flag? Are there any warnings that have been given to the public against this particular investment scheme? Some of us have found ourselves putting money in investment schemes where even the Capital Markets Authority or the central bank or any other regulator has told us to avoid investing with that institution. So what is the first thing that we should do? Go online. This information is on Google. It is out there as public information. Go and Google it out. Put in Meso. Have you, because when you Google or find out, it will help you do a due diligence to know whether this institution has been blacklisted by the regulator or the public. Because usually complaints from the public also can tell you whether you're dealing with the right institution or not. Thank you so much.
Thank you very much, Jacinta. Another hand clap for Jacinta, please. Alex, our dear farmer. Coffee takes so much time to mature. How do you advise people to balance patience, consistency, and expectations when building wealth through farming?
Thank you very much, our moderator. Maybe I should also have an input here before I answer your question, because it seems because I introduced myself as having moved from teaching to farming, all the questions are now centered on that. That's correct. But I am also a researcher and a publisher. And in fact, by coincidence, before I answer your question, by coincidence, I came with a copy of my latest publication, Cultures at Crossroads, Homosexuality and Human Rights in Uganda. And incidentally, my colleague here mentioned the word homosexual, if your son or daughter is a homosexual and so on. And interesting stuff here. I came with some copies in case you are interested. If you can Google this, this book, Homosexuality and Human Rights in Uganda, Cultures at Crossroads. It is, you can Google Amazon UK and see how it is doing. Now, coming back to, and incidentally, I will have a free copy for
for the chairman and the founder, Jason, and Daphine. Yes. Oh, he's not here. In absence, I shall give. Now, back to your question, Daphne. How do you balance the long term that you wait to recoup your investment with the excitement that you need to gain from your energies and investments? I think the word is actually patience. Any business, as long as you have invested rightly, you have done your research in terms of the gaps that you want to fill in that business, it will take time to recoup your investments. So the advice I can give is we should not look at the returns in the immediate immediate terms, but we always look at immediate, medium, and long-term returns, and that alone gives you courage to continue what you have started, and you don't give up halfway, and that's what I'm doing personally. I know the returns on my investments in the coffee may not come tomorrow, but over time I know I will invest, and that keeps me going. Thank you.
Thank you very much. And I think while we were welcoming the minister, I might have seen Charity around. I don't know where she is. Charity Basiima. Maybe she has stepped out. But she was supposed to be part of this panel, so the reason I wanted to call her here is so that she can at least answer for us one question. Anyway, thank you very much, Alex. First of all, my apologies for relying on coffee, but initially it's so that we can inspire people to take on these kinds of investments, so they can understand, for example, from someone who is already doing coffee, MCS is doing coffee, but what are the expectations of coffee farming, you know? Are members expecting too much from the cooperative? Is the cooperative under delivering? Is the time that coffee takes, are we complaining about the heat alone, because you've been seeing on the groups, you know? Or is the heat everywhere, you know? So I may not know so much about research and human rights, and also considering the kind of investment line that we are trying to take, it is easier for us to have conversations that people are going to quickly relate to, and then also are part of our investment portfolio. Yes, thank you very much. And so maybe one more question and we go for lunch. I don't know if the chef is ready, but I'm sure he's ready. So I'm going to get back to Dan. This is about the financial literacy gap. How critical is financial education in converting income into sustainable passive wealth? And who should take the responsibility for financial literacy? Thank you.
Thank you, Daphine. I think this question is best placed to my regulator, Bank of Uganda, and Capital Markets Authority, the ones who have that Department of Financial Literacy. But the last statistics that we saw, actually, majority of Ugandans are financially included. We are at 66% financial inclusion. And because of digital technology, financial inclusion has moved from, initially the statistics was around the unbanked. But now, majority of investments, you don't need to have a bank account. So what mobile money has done, currently mobile money and MTN and Airtel together combined have close to 42 million wallets in a population of 46 million. Now, there's a duplication where Dan has both MTN and Airtel, but that alone shows you that at least someone has a phone that has a registered mobile wallet. What the mobile wallet does is that it connects you then to an organized financial system. Now, at MCS, you're very much aware that people get investor send payments without actually through the bank. Yes, and so financial inclusion is no longer a regulator a requirement. It is a community networking requirement. Why? Because when you're financially included, then you get financial information on what is happening in the market. Take a quick example. A lot has happened. Like I said, Uganda, we've had the first digital IPO. IPO means initial public offer. So the first digital IPO was the 2021 MTN IPO, where people bought shares into MTN using mobile money. Uganda were also going to get included financially through buying bonds on mobile money. Today, MTN and Zeno have a connection where their customers can invest in unit trusts. So financial inclusion is no longer a requirement of regulators, but it is the way we practice our day-to-day financial management. Today, you're all aware that you can borrow through your mobile wallet. You can save through your mobile wallet. You can save both local and globally. At Cheaper Cash, you have access to over 5,000 listed companies on the New York Stock Exchange. Now, gone are the days where someone had to get a visa, have a bank account in the US, have a residential and work permit in the US for you to invest on the stock exchange. Gone are the days. Today, in the convenience of your home, you can invest on the stock exchange. You can become an investor on the New York Stock Exchange. Now, that was not there initially. Today, through the East African Capital Markets Authority, we are going to open up all the exchanges of East Africa so that Ugandans can also invest in companies listed on the Rwanda Stock Exchange, Johannesburg Stock Exchange, Nairobi Stock Exchange. That can only be done by digitization. So, financial inclusion has shifted from being a blame game or a gap to being involved digitally, because at least now we assume that everyone in Uganda, at least we have, I think, 22 million have mobile phones in Uganda now. So that shows you that financial inclusion is on your doorstep, on your doorstep. So to your question, I think it is no longer a gap. Are we back? Hello? Yes. So to her question, it's no longer a gap that someone should blame anyone. It is something that has come and is going to stay with us. And if you look at the academic structures lately, you know that the Ugandan syllabus has been restructured, and I think entrepreneurship and investment is now part of what is taught in school. So it is a requirement by both the parents, the academias, and the practitioners to make sure that financial inclusion gap is reduced. Thank you.
Wow, thank you very much. This conversation is so interesting. I don't even want to stop it. The reason I asked you about financial inclusion and literacy is because very many people, especially those that are, like you said, we have left that job for people in regulation. And yet, first of all, as business owners, as investors, or as people that are having investment conversations, it's important to let other people know what their options are in investment, so that they are able to know, like what they say, use this information the way you want. There are people that will know about investment and not take it. There are people that have heard about MCS for so many years. They see it on our statuses. We explain and we do. But then I feel like we need to take it upon ourselves to educate more about, how people can be financially independent and also grow their wealth.
Yeah, thank you, Daphine. Sorry, I think I forgot something. Now, let me go on the gender. 20 years ago, financial inclusion, investment, saving was only for the men. Now, as we speak, anyone who has Google Onions recording, you can go and check the FinScope survey. As we speak today, 56% of the women are financially included, even more than the men. I think here we did award the engineer in water. What's his name? Seru Semfuma. He got an award of being the best payer of the loan. The research has it that 48% of loans taken by women are paid. And men, we have, our default is at 72%. Sorry guys, I'm laughing. What does that show you? Is that the ball has changed the field. Initially, what we thought was for men is now for women. The biggest savers in this economy today are women. A bank will, today if I don't go with her to the bank to get a loan of 100 million and I go alone, if I don't say that I'm married, if she doesn't sign on that loan form, the bank won't give me money. Why? Because they know that the discipline and financial inclusion talked about of women sticks more than of men. So that's the statistics alone. I want to show you that. Imagine if the world where women didn't work. You understand? Where women didn't have investment. This she talked about trusts. I think you will direct them to the trust law. I think it's not yet signed in Uganda. Yeah, I think it's come. But if you check, I follow trusts in Tanzania. I follow trusts in India. I follow trusts in China. If you follow trusts, the wars that people have when they die, because your wife and your relatives and your brothers have come for her, the trusts driven by women are very successful. Why? Because they knew the vision bearer. Today we are here because of the vision bearer. You understand? So financial inclusion has shifted, and everyone is included. Next 10 years, now we're celebrating 10 years, every child is going to be included. Thank you.
Wow, thank you very much. Thank you very much, Dan. And now that we are on gender, let us now understand very well. You know, he talked about the improvements, especially in gender inclusion in investment. Jacinta, what are some legal or cultural barriers, or even enablers, by the way, that limit or enable women, first of all, limit them from building passive or generational wealth, but then also what are those enablers? You first give us the challenges, both cultural and legal, and then you also tell us, you know, if you can back up the fact that women are now better savers or they are now into investment, what are these enablers that have actually helped them to attain this kind of status? Thank you.
Thank you so much for that question. First and foremost, would begin by our constitution. That you see that 1.5 that the government, NRM government, did for us is mind-blowing. So most of us may not appreciate it, but the ladies who benefited on government sponsorship, or even to find themselves studying a course in university because of that 1.5, you will appreciate it. That gender balance or affirmative action that the government did for women enabled the girl child to actually go as far as university and be on government sponsorship. So those are some of the enablers. So when a girl is educated, a nation is benefiting. Because when a mother has been educated and is managing the finances, that home is stable. What are some of the other enablers? Our law currently says you cannot mortgage any property minus getting the spousal consent for the people who are married. Just like my colleague here has highlighted, if you go to borrow money from a licensed institution, they are going to ask you whether you're married, giving the lady a voice in investment in that property or in the family. Previously, what was happening is the husband would go and mortgage that property, gets money, and uses the money the way he wants to use it. Sometimes he would use it well, but business sometimes can go bad, and he makes the losses. So they have to come and they sell the home. So this law has enabled women to have a voice, and I would like to appreciate that position in the law. The other enabler we are currently having is the succession law, or the law that governs property of a deceased person. Now, if you do not write a will right now, just know that the law is the one going to distribute your investments or your assets that you've left behind. And the law recognizes children. So there is this whole conversation of illegitimate child or legitimate child. The law recognizes a child as a child. Whether the child has been born by a side dish or not, the child in law is recognized as the child of the deceased person. So men in the room, organize your children and put them in order. Yes, DNA may be the only rescue if the child is not yours. So that is another enabler. All the children are being recognized, whether boy or girl, whether from your spouse who is married or the other lady who is not recognized. So even the girl children who are born outside, the law recognizes them for purposes of assets of the deceased person. What are the challenges we are having currently? Our mindset. There are those families and there are those people who still carry on the traditional culture that says women cannot inherit anything. We saw that happening in the late, I think it was the Vice President, Family Secondaries. Yes, there was that, yes, the Prime Minister. Yes, there was that other battle. Yes, Nsibambi, because he only has daughters. But we thank God that the position of the law stood, and he's a lawyer. He was a lawyer, and his daughters are the ones who have inherited the estate. So what is it? What are your cultural beliefs? Some of us men in the room or outside there, we think that when you have girls, they cannot inherit anything. Like I told you earlier, I'm a Christian. We have a story in the Old Testament, Genesis, when they were distributing assets and land, the Jews. So what were they doing that time? There was this particular family where there were only girls. So when they said, who are your fathers? And they were distributing based on the fathers. These girls came together and they told Moses, but Moses, our father died and we are only girls. Are you going to throw us out and not have an inheritance? And they were recognized as girls and they gave them their portion. What is the lesson to us also here? Whether you have girls alone, they are also children. Let us change our mindset and recognize them when we are distributing our estates, or even when we are giving responsibilities in the family. You realize that some of the girls are more responsible than the boys. An example I've always had from people who have only sons. There's a particular guy whom I know. He has only sons, 4 boys. And then he says his sons have all married, but they do not come back and visit him. Now the daughters whom he adopted are the ones who come and take care of him. So all of us in the room reflect. When you're old and all your children have grown up, who comes and calls you, Daddy, how are you? Mommy, how are you? Is it the girls who check on you, or it is your sons? When you realize what is on the ground and the reality, you align your mindset. Let us try to balance these children, whether boys or girls. Our mindset, our cultural beliefs needs to be aligned to enable wealth to be passed on from generation to generation. And this can only be done through financial literacy. Talk to yourselves. Go in your communities, in your prayer groups, in those savings groups, in those family meetings. Now we are all going for Christmas. Most of us will be going to our villages to mix and to celebrate with our family members. What are you going to do to them there? Can we share some of this knowledge? Tell them the position of the law, how girls are part and parcel of inheritance, how girls are useful in the family, and that we are going to change our families, our own siblings and their mindset about the girl children in the family, and we shall change the economy. Thank you so much. Please educate the girls.
Yeah, and that I asked those questions so that I can remind you that we are still celebrating 16 days of stopping gender-based violence. So if even, okay, it's for women, but also as a man, if they beat you at home, you can tell us. It's it's okay. You can tell us. But I remember she said something about you men finding out whether those children are yours. Please do not. Just don't. Please just take care of those children. They are all yours as long as they are for your wife, they are your children. Anyway, so I'm going to ask Alex something that maybe he's currently passionate about. Alex, beyond land and these money markets and all these things they are telling us, how can knowledge, research, and intellectual work, what you're doing now, because you're in farming and you're also writing, but how can these become forms of long-term wealth and passive income? How can other people utilize these kinds of activities to create long-term wealth and passive income? Thank you.
Thank you, moderator, once again. The question to me and to the audience: how can knowledge and intellectual work be a basis for long-term, short and medium and long-term basis for passive, he called it active income? Yes, research and publication is one of the sources of income. Like behind research, there is knowledge sharing in the first place. And before you enter into a research area, you identify a problem. By identifying a problem and trying to find a solution to that problem through your research and publication, you are translating that knowledge that you have gained from the research, because we are not monopolies of knowledge. If I can tell you the content, most content of this book was from the participants, of the researchers, the respondents of my research. We share knowledge by way of understanding other people's problems. So how have I benefited, for example, maybe to give as an example, how have I benefited, or how am I going to benefit from this research and publication? Did someone try to Google this book for me? Can you testify to the public what you have found, how this book is selling on Amazon? Sorry? About 200 pounds? 51, about 51 pounds. Right now selling on Amazon. So through publication, you earn through selling your knowledge through the research that you have accomplished. And this book, as I speak now, it is widely on shelves of many universities in Europe, in America, and even in Africa. So may I therefore end this conversation by requesting that you support me to enjoy my remaining years of retirement by contributing to my retirement through the buying of this book. I came with some copies at a reduced price for MC members and for these members who are here today at only 40,000 Ugandan shillings. From 51 pounds to 40,000 Ugandan shillings to support me. Yes, when you change it into Ugandan shilling, 51 pounds is about 200 something Ugandan shilling. But I'm giving an offer to this audience to have a look at this book.
Thank you very much. Thank you very much. Now you see that apart from investing in farming, you can also actually invest in your brain. No, so that you write. Because I don't think anyone can write a book. Probably that's the reason I haven't written one. But I would like to recognize, yes.
Is the vision bearer? Is the knowledge behind it? Yeah, I wanted to ask if we go into trusts, comparing to that book, he's owning the vision, he has the knowledge and etc. How does he register it as a trust?
Thank you so much for that question. He has already published the book, and it is already selling outside there. So in the trust arrangement, you will say, there is this book, and any proceeds that come from this book comes into this account, and it will be distributed. So the trust helps you put all your assets in one pool, and you can identify how that money in all those assets can be used. Usually, the finances that come out of it, just like the rentals, the money will be sent in an account, and when you collect the money in that account, you say this money will be distributed in this way. By the way, when you set up a trust, you have the people who manage it. We call them the executors. Yes, so you, the settler, or the person who has founded the trust, you nominate. Usually we recommend 3 people, odd numbers, for purposes of voting. So these 3 people are managing this trust for you, for the benefit of the outlined people. They can be your mother, your father, your children, your grandchildren. You say whatever money that is collected from these assets of mine, for example, money that comes from the sale of my books, money that comes from my rentals, money that comes from my investments in treasury bills or bonds, all this money, when it comes, this is how it should be distributed. This one, it will be used for paying rent for my grandmother. This one will be used for paying medical bills. So you list all your dependents and the people who should benefit from the money that you've put together. The advantage with the trust is you can establish it right now when you are alive. You see how it runs, you edit it the way you want it to be. Where you see weaknesses, you fix it, unlike a will. A will is only valid when you're dead. Thank you.
Wow, thank you very much. That was, I hope the question was answered. And I wanted to take this golden opportunity to welcome our patron. Not here, we're just recognizing your presence. I don't have the right shoes to welcome you here. But in the meantime, I'm going to ask for one person to come here. I think when we called in earlier, she was not around. She will take 2 questions, and then we shall open up the floor to our people for a Q&A so that you can best understand, you can ask your questions, any of our panelists, so that you can best understand what they shared. So I'm going to call Charity Basiima. You know, she's Charity Basiima. Please clap for her as she comes. Continue clapping, she's not yet here. We need to morale boost. Charity is a seasoned, she's a real estate consultant. And to even be more specific, affordable housing. The gospel that we have been preaching here every day. She has changed the face of affordable housing in Uganda, both through her ministry, what she does. You know, your job is your ministry here on earth, for us who believe in God. And both through her job and also as one of our investment committee members, she has led most of our affordable housing projects. She has really advised us through our projects. And I wanted to ask her a few questions about affordable housing. Most of you are aware, you've interacted with these words that I'm using. They are not new, but maybe I'll ask her to also tell us what affordable housing is. I'm sure there's someone out there who doesn't know. I'm not going to mention their names, but I can see them from here. And then she's going to explain to us what affordable housing is, and then I'm going to ask her about 3 questions, and then we shall have a Q&A. By the Q&A, I mean you can ask any of our panelists anything that you did not understand or anything that you want some clarity on. And in case the question is just mainly about MCS, you can also ask it when we shall answer. Thank you very much. So Charity, kindly first explain to us what is affordable housing.
Thank you, our moderator. Yeah, my name is Charity Basiima. I do consultancy in housing acquisition, development, and financing. First and foremost, affordable housing is generally a term that describes every individual as we acquire properties. What is that property that you can comfortably afford at any particular stage? It could be in high end, it could be in the middle, it could be in the low end, but can you afford? That's the whole idea. Because as we grow our housing sector, you realize that a lot is happening and some people are facing challenges or are taking on what they cannot afford. And as M says, I think we have created an opportunity where members have acquired assets affordably, conveniently, whereby at least they are paying for their assets, land acquisition, as they pay in installments. So generally, we look at the price of an asset in relation to that individual's affordability. What is that you can do, especially if you're investing? Why are you straining? Because you know loans are very expensive, and we're advising all of us, start small and grow big to avoid challenges and all that our panelists have talked about. I hope that summarizes affordability. So basically, we're looking at an asset that you can acquire while you're using a part of your income which should not exceed 35% of your gross income. Because ordinarily, we have other things we have to spend on to survive. Thank you.
Thank you very much, Charity. Have we all understood what affordable housing is? We have, right? If you haven't, I can ask her to tell us again. Now, Charity. Can we take the questions later? Yeah. You, ladies and gentlemen, if you have a question, kindly write it down so that, because you could have a question and it's part of mine here, and then they take it. So if you have a question, write it down so that we can later cover those. So Charity, at what point should someone transition from renting to owning? Because you said, why are you trying to take out loans to invest in real estate? So at what point should someone transition? For example, like me, at what point in my life, or what source of income, or what kind of income should I be earning for me to transition? And do you advise low-income earners to move into real estate, and why? Thank you.
Thank you, Daphine, once again. Yes, I believe we can transition at any stage as long as you've clearly defined the areas of your investment. And we've been sharing here how best we can invest in different lines of investment. You've had treasury bonds, you've had... So it all takes us back to our individual capacity. I would recommend that let's start small. We look at someone who has just left the university, you've gotten a job today, you start earning your salary. I would advise start focusing on shelter. Guys, shelter is very, very critical. In this era, in Uganda, in Kampala, especially in the urban setting, if you are paying rent when your child is beginning to go to nursery, you need to think twice if you don't have where to sleep. Because rent keeps going up, it appreciates on a daily. So if you started small, say, through MCS, here we are, acquire a plot of land, tap into this opportunity that MCS is providing, you're getting it affordably, conveniently. After you've cleared it, then MCS can build for you. Or you could use your salary to build slowly, slowly. without straining. Because as I said, loans are not for everyone, unless you're a member of MCS and maybe we are able to finance you at MCS. But from the commercial bank point of view, you must really have a sustainable income for the bank to give you a loan. And remember, loans go with interest. So, and you've seen many people in newspapers losing properties because either they are taking on what they cannot afford at a particular time. So once you've addressed the issue of shelter, then look at, can I invest slowly? Yes, that extra income we're talking about, maybe through housing sector. You could build rentals, or we have come up with affordable housing in the market right now, which allows someone to invest slowly, whereby that we have different profiles, let's say 1 bedroom, 2 bedrooms. At that point, can you afford the 1 bedroom and start small? It allows you to deposit, book your unit, and pay within 2 to 3 years. And with that, you're not paying any interest. As compared to someone who say, I've built my block of apartments or a house, I'm selling it. How many of us can afford to pull out 200 million at a go? So that is the challenge we are trying to address through affordable housing. Start small and plan for an investment. At least you can say, in the next 2 years, I'll own a plot of land. I'll own an apartment. It could be 1 bedroom, but it will give you an income as long as you've addressed your shelter. I would recommend first start with your shelter because it's critical, it's a basic need. We all need to live comfortably.
Thank you very much. And what are the biggest, errors people make when investing in real estate, especially first-time investors, and how can they avoid them?
I think the challenges I've seen happening, one is taking on what we cannot afford from the start. Or also, secondly, lack of knowledge. Please seek knowledge. Before you put your money in any asset, seek knowledge. Because you must look at the return on investment. Does it work for you? Because we are different people, and times some people tend to follow what others are doing. But real estate is capital intensive. As I said, where the housing sector has created opportunities for you to use little money as you work towards achieving an investment, it is a good opportunity and it creates that leeway flexibility. So the challenges is quite many, but the most important ones that stand out is lack of knowledge, also lack of understanding the very product that you want to invest in or what you can afford yourself. So I think we need also to follow the compliance system in our government. You've heard some people have lost money because they are not conscious, they don't know what the law says. As my colleagues have advised, if you're a girl, you're free to invest. If you're a lady, you're free to invest. But have you followed the law, or you are hiding? And then tomorrow something happens and you're jumping out and maybe your spouse doesn't know. So some have lost money through that. So I think the biggest challenge is lack of knowledge. Let's seek knowledge before we throw out our money out there. Thank you.
Okay.
Yeah, thank you. Sorry, let me add this. I think the biggest elephant in the room in real estate is fraud. If you go and buy from so many real estate agents, today if you check a case, there's a case of Jomai Estate versus 10,000 households in Chira. Imagine 10,000 households are against one entity. And look at the value of Chira today. And Mitiana. So imagine you did not, because you did not research, you did not go into the entrusted regulated entities like MCS, you went and bought your land. So today, for example, if MCS tells you, I'm taking you to Garuga, we are building a village in Garuga, and you start with 1 million Uganda shillings. If MCS, by any chance, the Garuga land is fraud, MCS, your money is safe. Why? Because it is regulated. It is going into legitimate business. But there's so many mushrooming real estate agents
at every corner of a developing trading center. So if you go and put your money in that, there's high risk of losing that money and high risk of fraud. So think about it that way, that if you invest your money today, there are people who have built houses and they don't have titles. But MCS today, I think one of the milestones we are celebrating, they're handing over titles. There are people who have never seen a title in their minds. That kind of exposure and risk, especially in the people of diaspora. And initially, I think we talked about the gender balance. Women in the room. I know women who, there are stories we've read where women build houses privately and then they rent them over to their husbands. You understand? That's risky. You get it? So that's the nature of fraud. The elephant here is that please deal with regulated real estate entities who have high corporate governance like MCS. Thank you.
Wow. And
Just a
thank you
minute.
very much.
To add to what he's saying, I remembered one critical issue. As we buy these assets, actually the due diligence we do, it's not about doing a search in lands and looking at the title. There is a lot to do with ground checking. Very, very important. We've seen people buying properties and then when you come back on ground, you find actually land does not exist. Or you find their encumbrance, they are squatters. So don't look at the search report and a copy of the title and think it's genuine. As he has said, you must do due diligence through the regulated entities that are mandated to give that confirmation to you. Thank you.
Thank you very much. They talked about some of you who do not know or have never seen a land title. Today we are giving out land titles. So if you're out there, you're maybe watching us on the internet and you've never seen a land title, maybe you might get a chance to see one for the first time. So one last question for Charity, and then I can open this floor. Charity, this is about urban planning and return. So how do planning laws, infrastructure, and location choices affect the long-term value and rental income of affordable housing projects?
Yeah, one of the, I think, challenges, I would say, we still have a problem with our government. I think our city was not planned properly, and so it is affecting the housing urban growth that we are seeing in Kampala. And of course, that feeds into rental values, property values. You've seen, I think, areas of, what can I say? There are areas that are really very slummy, and yet today, as Uganda, as Kampala, really would be proud of those areas. So, and all this goes back to our government, policies, planning authorities. There's a fight. I hope we'll get there, Council, but it's a big challenge. And so for us now who are coming up today, can we really plan better? Like MCS, can we plan better so that going forward, we're having our products be well aligned with well-planned areas, especially if you're acquiring land in fresher environment. Let's plan better so that it helps us to anticipate good values. Of course, we have high-end locations that are well-marked, like Muyenga, here we are in Munyonyo, we are now looking at Entebbe, and Tinda, those that are within urban, in the middle of town. And also Kampala is growing out of town. So that's why you see us stretch back here. In Munyonyo, some time back, it was a bush, but you can see what's happening. So we need to follow the clear national planning authority to understand like the government policies as one of, I think the minister mentioned it, where our president is focused. And that also feeds into the investments that we are planning to do, because we have to look for money. So back to your question, Daphine, location matters a lot. Location, keep saying location, because that's what again determines the pricing and the return on investment. If you're buying in Kololo today, I believe most of us would never even ever think of own a property in Kololo. But through affordable housing, we've come up with products that have created an opportunity for even those who would never have expected to own a property in that area. So basically, affordable housing is helping members or individuals to own a property where you wouldn't be in position to buy land or build. Meaning you're only looking at the cost of the unit, and if you can afford it at that point in time, pay for it slowly without stress. So location is critical. The nature of the products that we are bringing up are very critical. They feed into the values we are talking about. We don't expect someone to come up with a product, say, in Muyenga, which is a product that is meant to be in Chira. Those things affect values. I hope we all understand that. So let's align our housing within the location and the values at a particular time.
Wow. Now I really wish that we had engaged you earlier. And I would like to open this floor, but with caution that let's wrap up these questions very fast, because I have received some great news. You know, our program was interrupted kindly and in a very good way, because we had to accommodate the minister since he had to run away for another engagement. And so we kind of pushed in lunch hours, but the lunch is ready, so you can smile. Oh, what's going on? Is everything okay? Please smile a bit, you know. So I'm going to take some questions. Can I, just by show of hands, people who have questions, please? I need someone to help me move this microphone.
Yes, this is to the legal person from Bank of Uganda. Yes, my first question is related to assets. What is your advice on we buying assets and putting them in our children's names? That's the first thing. Secondly, if someone has a partnership with their wife and they both have 50-50, but they choose to transfer the shares to their children, how safe is that business in case of any legal issues that come against their assets? Thank you.
So as I think we'll first get all, I saw another hand. Anyone with another question? You had a question earlier, was it answered? Good. So I would assume that either you want to finish up quickly and go for lunch, or you understood. I'll just go with the latter. I'll just assume that we have all understood.
All right, thank you so much. The first question is, what's your advice on buying assets and putting in your children's name? There is no problem with that. The only issue will come in that if you want to use that property, for example, you've bought land, let me say here in Munyonyo, and instead of putting it in your name, you've put it in the name of the child who is a minor. So it means the minor cannot transact on that property. So what will be happening, you will come out as the guardian or the custodian. As in, everything you'll be doing it on behalf of the child. So all the transactions will be in the name of the child, but you'll be the registered guardian who will be operating on behalf of the child. Then the second question is, what about partnership, which is in the children's name, and then the legal implications of the business? It is still the same. First and foremost, you cannot register a partnership in the name of the child. Yes. So based on that provision of the law, it will not be possible. Thank you.
Thank you very much. Dennis, was your question answered?
Of legal issues, and I have put assets under my children's name. How safe are they? I'm not looking at the loan issue. I'm looking at about land. But now I have a financial issue. We have seen where businesses are being taken over. There is something. In case Protea was in the name, how protected is the business against any legal issues that come?
So that property, thank you. That property is in the name of the child, so it cannot be part and parcel of the business. You will have hidden it, basically. Yes. But we can lift the veil. there is that provision of lifting the veil of incorporation. Who are the beneficial owners? So yes, that is where we'll go. But otherwise, if it is in the name of the child, it is okay. But with the public servants, for NSSF, for IGG, we are supposed to declare the properties in our names, the properties of our spouses, even the properties in our children's name, because they know that we hide property in the name of our children and spouses. So, stand warned.
Yes, thank you so much. May I have a question? You said that if you co-own a piece of land, if you are two people and you co-own a piece of land, and then you die, you say that the person who is alive is now the legal owner. What happens to the children of the person who is deceased? Are they also beneficiaries of that plot of land because initially their parent was a co-owner?
Thank you very much for that question. Now, that is legal jurisprudence that came recently. There was a case that one of the judges gave a ruling. I think it was about 2 weeks ago. And what was the issue? This property was owned between two people. And the previous jurisprudence we've been having is, it says joint property, which has been owned as tenants in common. The survivorship principle was applying. Says the surviving owner owns it, but only when the title is written, maybe Jacinta and Ronald in brackets, tenants in common. Now, what the current ruling that was issued recently, it says it doesn't matter whether there is that bracket of tenants in common. So long as you have two people on the title, when one dies, it is presumed that the other is automatically the sole owner now of that title. So the only way you can fix that now is go back and amend who is on the title. If you want to consider other people, add them on the title. Or be the only registered proprietor on that title, such that on your will, you can describe who is supposed to benefit from that property. Thank you.
I think additionally, you can also register that property as a partnership. Because in the partnership deed, you divide, you list the objectives of the partnership or a company. But if you do name to name, Dan and Paul, then what you said will proceed.
Ladies and gentlemen, you see at MCS, we do not only sell to you properties, we also enlighten you on how to secure and safeguard your properties. Can I get a hand clap for MCS at least? Okay, and I think I'm going to invite us to lunch because I can see these hand claps are not hand clapping. But the most crucial thing right now, use all the energy that you have left. It's okay, we're about to. If you faint, we shall bring the food to you. It's just here. Use all the energy that you have right now to clap for this wonderful panel. All the energy, all of it. And I would like to make, you know, the other day people were making a pledge to the environment. I would like to, in my name and also MCS, to pledge that these conversations are going to continue. They're not ending right now. And therefore, try to engage with them wherever you see them and whenever you can. And we will try to make sure that you are included, because I have seen how intense these conversations are and how helpful they are over the past few weeks that we have been running some of these financial literacy conversations. And I really an investment, and I really believe that someone who has come in today has not gone back the same. At least there's something they have learned, and that is what we are always trying to achieve. How can we meet and not leave each other the same? And right now, I would like to ask our wonderful panel to stand up for a photo moment, and then after, they will take their seats. Kindly.